Focus on your past and focus on your future. I try to learn from the past, but I plan for the future by focusing exclusively on the present. That's where the fun is. Donald Trump. You know, I hear people say all the time that they have a company that's a great company from the past. Look, things change. You have to stay in forward motion. This is a book called The Art of Speculation by Philip Carret. He was a famous guest on Wall Street Week. He was one of Louis Rukeyser's favorite guests. And he basically is saying that speculation is an art. Dixon Watts says speculation is a fine art. The man who looks upon speculation as a possible means of avoiding work will get little benefit from this book. It is written rather for the man who is fascinated by the complexities of the forces which produce the ceaseless ebb and flow of security prices, who wishes to get a better understanding of them. So you might want to pause your video player and read the rest of this text, but this is a very interesting book because it discusses the concept of once you get past the point where you're worried about your money all the time. And I have to say, I've been investing for 50 years and I've never lost money in the stock market. I've had difficulties. There have been difficult periods, but I have more, my portfolio is in better shape today than any time in the past. So once you reach that point in your investing career, you start to realize that there are certain people out there that have this gift where they're able to deliver results because they're viewing this thing as more of an art than as a way just to make money. Making money is great, don't misunderstand me, but the concept of really enjoying the work is so important. Now, Jesse Livermore was one of those people. William O'Neill was one of those people. Richard Wyckoff, Peter Lynch, Warren Buffett. These people had special skills, and you should study them and try to duplicate their work. One thing about Livermore that I think is the most important is that he was a real good seller. He was a good buyer, but he was a really good seller. You have to know when to sell. Sometimes things just don't work out. And the sooner you can realize that, the better you will be, because you want to keep your losses small. So Livermore says here, a loss never bothers me after I take it. I forget it overnight. But being wrong, not taking the loss, that is what does damage to the pocketbook and to the soul. I have been there myself. You've got, once your discipline tells you it's time to go, you got to go. Now, you can always buy the security back if you're wrong. Quickly cut your losses. Cut your losses quickly without hesitation. Don't waste time on what you might have done differently. So, Livermore was somewhat controversial back in the 1920s. I mean, he was mainly a short seller. He made a lot of his money short selling. In 1929, he made $100 million short selling. So his skill was selling. So when you look at the situation, when you know something is wrong for you, you have to make difficult decisions and trust your instincts. Back when I was in my 20s, I made an investment, the worst investment I've ever made. It was in a coin-operated car wash. Then I had a partner. And I knew the first week that I was involved in this that I had made a mistake. But I couldn't get out. It was just an illiquid investment. Well, fortunately, a fella came along that wanted to buy me out, and I sold to him, was able to recoup. And I felt kind of bad about it because I knew it was a bad investment. But lo and behold, a hurricane comes along, damages the building, and the insurance claim gave the money to bail the whole thing out. So the main thing about this bad investment was that it was illiquid. You always want to invest in things that you can get out of within 24 hours. But I was able to get out of it, and I'll never do something like that again. So here's an example of a stock. This is Haynes Celestial Group. They make teas. They're very popular. Their products are very popular. But the stock, peaked up here around 52 and is down now to 80 cents. So at some point, you have to make the decision, I got to get out of this thing. It's just not working out. So cut your losses quickly. Let your winners run. That's the main message here. Now, as of last week, we've had 8 weeks of a winning streak where the S&P is up 10%. So we went back in history and we said, okay, this has only happened, this is the 20th time since 1950. And these streaks are rare, especially when they're up 10%. So just looking at history, and you look at this graph here, it shows you how many times this has happened. But 12 months later, the average return was 13.16%. So this rally is indicating that we are primarily in a bull market. So everybody's worried about a bubble, a technology bubble. I'm worried about it. Everybody's worried about it. So let's come up with a way to deal with this. So what I went and did is I took the AII bull ratio minus the bears. This is a survey where they ask people, are you bullish or are you bearish? And if you subtract the bears from the bulls, you get a remainder. So this is 1998, 1999, going into the dot-com bubble of 2000. Now look at 99. I mean, you barely had any pessimism at all. It was extreme optimism. This is what a bubble looks like. So my point is that right now, it just doesn't look like that. I mean, this is all about human behavior. When the masses get really hot on the stock market, that's when you need to get nervous. And right now, there's a tremendous amount of pessimism. I mean, go back and look here again. This is 1999. There was just no pessimism whatsoever. It was all optimism. So as we get into this year, and this is recently, this is as of last Friday, we're at a reading of about a negative 12. Well, when you got back in the dot-com bubble, you got up to readings of 60. We haven't seen a reading of 60 in I can't remember the last time. So what I'm saying is, I don't think this is a bubble. I think we've got more to go. So let's just keep an eye on this. So we want to look at the market here. Here's the QQQs, which is basically the same thing as the NASDAQ. And I can get intraday volume. Volume's kind of light. We are in an uptrend. Things are looking positive for the NASDAQ. Here's the S&P 500, same thing. However, today volume is somewhat light, but we continue to be in an uptrend above the moving averages. Everything looks very positive. The aggression index. Now remember, the rules here on the aggression index is that in order to get a sell signal, you have to break below the moving averages, and the moving averages turn down. And that's just not the case here. This is a very strong indicator saying that you should continue to stay aggressive. The interest rates are a big question right now because we have seen somewhat of an up move up to 4.3% on the 5-year Treasury bond or note. And it's backed off a little bit, but we are still above 0 on the power index, which is basically saying that more than likely the Fed may raise rates and not cut rates. Now here's the primary trend. Primary trend for the S&P continues to be very positive. The NASDAQ continues to be very, very positive. This is a very important indicator. When you get into these periods like this, that's what you need to worry about. But right now, we're in pretty good shape. Primary trend is up. Price of oil coming down. We got down to 89.25 today. We peaked up here around 112. But it looks like the oil market is starting to stabilize, which will bring inflation down. New lows on the New York Stock Exchange starting to settle down. We kind of got worried, in the last couple of weeks about what was going on here. Well, we got above 40 a day, but we're starting to settle down here. So things are looking somewhat positive. But last but not least, I just wanted to point out that Bitcoin is breaking down below the 50-day moving average, which is just basically saying that this has kind of run its course. I really am not a big Bitcoin guy, but I do think it's interesting to keep an eye on, and it has broken down below the 50 days. So if you have any questions, please let me know. Thank you very much.